Good evening, everyone. You're tuned into Markets Tomorrow right here on ET Now. I'm Ava on the Bash. We kickstart the show by telling you about the three experts that will be joining in over the next 30 minutes. Bhuvnesh Singh, Managing Director and Head of India Research at Barclays, will be with us on the show. Sandeep Wagle, Founder and Managing Director at Aptar Technical Advisory Services, joins in on the charts. And we've also got some opinion coming in from Varun Goyal, Head of PMS at Garvey Private Wealth, who joins in on the show. So Varun, let's get started off as to whether or not this kind of momentum today was inevitable given the kind of sell-off that we've seen in the equity markets, or do you think that we are now likely to see some significant support building up at these 6150 levels?
Well, our own sense is that market is unlikely to sustainably fall below 6,000 in the next few quarters. We believe that the worst as far as the macroeconomics is concerned, both domestic and global, is already behind us. We expect a turnaround as far as the GDP growth is concerned in quarter 3, quarter 4. Currency has already seen its worst. We have seen inflation numbers which have been quite high, and we don't think there is a whole lot worse that macroeconomic data can really get from here. And the quarterly earnings were definitely much better than expectations. So our own sense is that, barring any short-term fluctuations, we don't see big volatility in the market, and we expect the markets to continue to deliver positive returns in the next 2 quarters.
Okay, so that's a word on the markets with respect to the overall macroeconomic situation. But Sandeep, do you think that we have the legs to build up from this kind of momentum? Because the Nifty futures today did surpass that 6,200 mark. Do you think we're likely to see that now tomorrow?
Absolutely, Avan. I think it has opened up with a gap and it has sustained that gap. More so, it has closed at or near the highest point of the day. Now, I do not want to get into a debate or an argument whether we will make a new high or we will test that. That actually doesn't matter. 63.42 is the high that Nifty made. Now, if we go to 63.30 or we go to 63.30, it hardly matters. But I'm certain it will go somewhere near that. So, from the current level of 61.80, 6200, I would talk of a 63.50, 63.40 being tested at least, if not being broken. So very clear, some more upside. And on the downside, 6100 will be a very strong support. 60.80, 6100 will not be broken that easily. So 61 to 63.50 is the range I map the Nifty at in the next few trading sessions.
Okay, that's a pretty positive outlook, Sandeep. But Bhuvnesh, let's get in your portfolio strategy at this juncture. Do you think one should stick to defenses, or is it time to throw some of those defensives out of the way and add a little risk to the portfolio, given that some of these stocks have also performed fairly well?
I don't think so. The time to add risk has come yet. Over the next 6 to 12 months, the earnings numbers for Indian companies will continue to disappoint, specifically on cyclical sectors, while the export-oriented plays or the import-adjusted plays, they will continue to do well. So our portfolio recommendations: stay defensive, IT services, pharmaceuticals, energy sector, consumer discretionary sectors. These are the 4 sectors which we continue to prefer. We will be significant underweight on financials, on industrials and materials.
Meantime, Sandeep, you can't ignore the kind of move that we witnessed in the capital goods sector as a whole. Of course, Jayaprakash Associates, it can be attributed to the numbers, but is the strength here to stay? What do the charts look like for L&T and JP Associates?
Well, Aman, both of them are on the verge of clearing their prior tops. I have a very clear target of a 51, 50, 52 as far as the JP Associates is concerned. L&T, I would talk of 1,020 at a current level of 989, 990. So I would talk of a very clear trading upside of anywhere between 4 to 5%. That should come in over the next 2 or 3 trading sessions, and probably even higher than that given some more time.
Okay, meantime, you did have the IT pack, which was also pretty resilient today as a whole, and particularly an Infosys, that one hit a fresh 52-week high in today's session. Bhuvnesh, give us your sense of the IT pack, the top 3 recommendations that you would have from this sector.
In IT services, it is very simple. If US growth is improving, definitely IT services sector could see slight uptake in revenue growth rate. The rupee depreciation is definitely helping. Rupee has stayed flat at 45 rupees plus minus 10% from 2002 to 2012. Suddenly in 2013, we are looking at normalized rupee levels of 60 rupees plus. That would be a huge beneficiary for IT services sector, not only in terms of the translation gains, but also in terms of margin expansion. So EPS growth of this sector could continue to surprise on upside. And multiples, if you look at that, they're not rather expensive. This sector is still more of a cheaper sectors amongst the names which are delivering you 15% earnings growth.
Just wanted to focus in, Bhuvnesh, on the overall banking space. Now, as a whole, given that a lot of skeptics have been saying that one should avoid this space, particularly the PSU banks, on account of the results and the asset quality concerns, do you think it would be a blanket avoid when it comes to these names, or would you prefer perhaps to put your money into some of the private names as a safer bet?
Within the banking sector, relatively private banking names are better. Within the private banking names, more defensive bets like HDFC Bank or Kotak Mahindra or HDFC are better. But overall banking sector, we still expect it to underperform the index.
What's your view, Sandeep, and how would you be playing the Bank Nifty? Because if you look at it today, it was clearly the driving force in the session. Do you think that the Bank Nifty futures is also likely to continue to see further upside?
Well, as of now, over the last couple of trading sessions, I think the Bank Nifty has clearly outperformed the Nifty and some of the other sectors, and I think it will continue to do so. At a current level of 11,100, 130, I would talk of a move up to 11,500, 11,600. And till that time, that is the next couple of trading sessions, I think the banking stocks will do well. A Bank of India is what I have recommended, and I will single that down. That is showing a good momentum, and that can witness a 7-8% move even from the current levels.
How would you be playing individual banking stocks, particularly some of the names like a UCO Bank, an Indian Bank, Corporation Bank? All of those rallied very smartly today, Sandeep.
Well, we have had a buy in a UCO Bank during the day. That has given a clear breakout. But in terms of momentum, I would talk of a Bank of India. UCO Bank will also see a 7-8% upside over the next couple of trading sessions. But today I'm recommending, in this show, I'm recommending a Bank of India, which I think has got momentum in terms of price pattern and volume. Not to say that the others will not outperform. More or less, they will move together. It will be a matter of some degree here or there.
A bit divergent when it came to the moves in the overall metals basket. Hindalco, on account of fundamental news, was pretty active. Tata Steel put on a good 3%. In fact, that has been a marked outperformer within the metals basket itself. SAIL too did well. But on the other hand, you had the likes of Acesa, Sterlite, Coal India, Bhushan Steel. Some of these counters were a bit muted. Bhuvnesh, what's your opinion? What's your kind of view on, the rally that we've seen in some of these metal names, particularly the likes of Tata Steel, wherein the hopes have been pinned pretty much higher on the European business and what that could potentially be as a growth driver for the company?
And that is exactly the point. The names like Tata Steel are rallying not because the hope of Indian part has recovered, but suddenly you find the European part, which because the European economy could be close to the bottom, next 12 to 18 months it could give you better returns. The other part of metals rally has also to do with China. Compared to say 3 to 4 months back, the optimism on China is back, and that has led to metals rally across the world. So it is again a globally driven rally and not an India feature